Yeah, it's interesting that we see a weaker fix like this on a day that U.S. markets were actually shut. We probably didn't see a whole lot of, liquidity or volume when it comes to FX side of things. So it's pretty interesting that you're seeing this. Let's get more of this with our Chief Asia FX and Rate Strategist, Stephen Chiu. What do you think is the message really being sent there? That, is the PBOC really just letting the currency weaken more now?
I think we have to look at how the yuan has been doing this year. Actually, it's one of the outperforming currency in Asia this year because they have kept fixed unchanged, given the dollar is still so strong. So now, actually, when market is somewhat calm, as you said, US is out, it's probably a good timing to let fixing slowly flow higher so can actually pull back that support a little bit, because later on, market is going to go back and see when the Fed is going to cut. It's going to be July, it's going to be September. And if the dollar drives higher, then it will be harder for them to let the fix move. So now, at a quiet time, it may be a good timing to do that.
Now, just to change topics, you've written about this conversation around quantitative easing in China, but you're calling it QT. Why?
I mean, to be very honest, market has been talking about QE. It's really quotation QE. Because when we talk about central bank buying and selling, actually, of bonds, how do you call it QE, QT? It's when the buying and selling is large enough compared to the market itself or to the balance itself. But now it's actually very small. If you look at the PBOC balance sheet, it's only holding 5% of CGBs. It's not going to buy that much. It's not going to sell that much. So that's why it will never be the proper QE and QT. So I add quotation out there. And market only focus on the buying of the bonds. But if you look at the bond yields, they're at record lows. 10-year is near record low. And PBOC has warned about these low yields, the duration risk out there. So why would they want to jump in and buy when there are so many demand out there in the private sector? Now, in fact, what I think is that they may actually start selling first. So yields rebound, market gets spooked, yields rebound to a more appropriate level, then they could buy from there. That makes more sense. And the Chinese media actually cited that China thinks that a fair value for the 10-year and the longer end yield, it's in the range of 2.5% and 3%. We are at 2.25 now. So I don't think it's actually attractive for PBOC to jump in and buy.
Well, what's the outlook for rates then?
For the earlier part of second half, I think rates will actually sell off or rebound a little bit higher, if you put it that way. And then buyers will come back again.
Does that mean that they need to, though, cut rates in order to justify this where yields are right now?
I think certainly, but people always look at the 1-year MOF now 2.5 and compare that to the 10-year bond yield where it's 2.25. So that's why from a MOF perspective, the 10-year yield is way too low. So unless they cut rates aggressively, which obviously they wouldn't do that before the Fed moves. So that's why they will have to support the bond yields before they start cutting rates.
So the holders then, particularly those who have built duration, and a lot of them recently, right? 10-year yields, 30-year yields. How big of a risk now are they facing if the PBOC starts selling?
It's quite a lot. I think the recent buying is mainly from the non-bank financial institutions, because the banks are already the largest holder of over 60% of the market. Right. So obviously they perceive it as a very safe asset, especially with all the policies in China, all the regulations. So they really have to lower the duration risk instead of keep buying the CGBs. Otherwise, when that hits, if you remember a few years back, people say will hit market when the easing expectation is too strong.
They have to be very gentle, though, because they're going to hit the banks quite a lot if the CGB market, I wouldn't say crashes, but if it falls significantly, a lot of the banks are going to take a significant hit.
Yes, so they will have to keep doing verbal warning for now until they do something actual.
Yeah. Okay. Massage the market mindset.
Yes.
Stephen, thank you so much. Stephen Chiu, our Chief Asia, FX, and Rate Strategist at Bloomberg Intelligence.